Hello, guys. Welcome to the Investors Den. My name is Tamer, aka TeeTheTrader. Whew, what's going on with the market, right? That's what's on everybody's mind. It's a bit dicey. We don't know what's going on. Is it good? Is it bad? Should I sell my assets or should I keep it? Should I wait? Well, currently the fundamentals and the technicals are saying two different things. All right. On the technicals, we're a bit bearish. We don't know. It looks a bit bearish, or that's what everybody's saying. But on the fundamentals, we're obviously bullish. But let me just state out my opinion. But before I get into it, I just want you to know that none of this is financial advice. This is simply just my opinion. So don't take this too seriously. I certainly don't take myself too seriously sometimes. So you don't want to take me too seriously. But let's dive into it. So on the 4-hour time frame, we can see that we're still in that downwards movement, but it looks right now that we found support just above $32,180. It looks like we found a bit of support there. Earlier this morning, it looks like we're going from this area to test this green support area again. If that had happened and then we are traded sideways a little, I would have been convinced that we'll go down. But there's no assurance per se that that's not going to happen. We just have to wait and see at this point. Like I said in my Telegram group, I'm currently in wait and see mode. I'm currently avoiding trades and I'm just like waiting. I tried to enter a long position yesterday on Ethereum. My stop loss was hit. Then I tried out another one. I was in profit for a little, so I moved my stop loss to break even and reach. My stop loss got hit again and I neither made profit nor made loss. So I was more convinced that perhaps the market is not ready to break out yet. Let's just see what happens. The idea behind that trade was that I was hoping that we'll see something like a breakout at this point and then end up reaching this resistance, which did not happen. And instead we got a breakdown to the downside. So apparently this trend continues until there's a final breakout. Ethereum was in fact looking like it was going to explode. And that was why I was convinced that BTC was going to do the same. But BTC proved to be the stronger, the king coin, and decided to pull everybody down. So let me just get to it. So typically, this is a bear flag. If you're looking at this chart is too jam-packed. Let me go. I've kind of messed up this chart already. Let me go to something simpler. Okay, so this is a bear flag, right? What we see here, from here, like this, when you have something like this, it's a bear flag. And what a bear flag implies is that it's a continuation pattern where it seems like we're going to break down. We're going to continue the trend downwards. And over here is a typical example of a bear flag where we had this pattern here. We had this, and then there was a continuation to the downside. And over here too, we can see something like that. This is the pole over here, and then this is the flag, and then another pole to the downside. So typically, when it comes to patterns, when you have something like this, when you have huge bounces at a particular support area, and then the bounces get slower or the bounces get lesser, it basically means that the support is getting weaker, and that could potentially lead to a breakdown to the downside. When the support is getting weaker, it means it's not going to hold anymore and it's going to break down and test new support levels. But my fear right now is that after, maybe I should switch to the daily charts so it's clearer. Okay, so this is better. So but my only fear about this chart is that the next support after this support area at 30K is 20K, or the lower 20s basically. A lot of technical analysts are of the opinion that this is going to happen. I've been refusing to believe this for the longest time, but I'm starting to see reasons that this might be possible. Don't get me wrong, I'm not saying that it's going to happen. I'm just saying it's something that you have to watch out for if you're in this market, okay? And sometimes when doing analysis, one thing to always look out for is past price actions, or what has happened in the past and how these patterns have played out in the past. So let's check out what happened before. Let's check out over here. Yeah, this is a perfect example here. So what we see here is the top of the market in 2017. This was December 2017. This was the top of the market, right? So we had something like this here, where there was a huge support at this area. Obviously, as you can see, there was a huge support here. First bounce, there was a little bounce at this point. There was even a little bounce in this place here, but let's say this was the first bounce, and then we went high, second bounce, third bounce, fourth bounce, fifth bounce. There were lots of bounces, but if you notice something and if you're being honest with yourself, the bounces got lesser. And what happened afterwards? Breakdown. That means this support area was no longer very strong the market, to hold the market. So it potentially broke down. Of course, after breaking down, it went back up. But look at this. This was a long period of time. This was from, let's say, from here, the breakdown all the way to this bottom here. This bottom was around 3K. So before it got back above the support area, was around 154 days, which is the longest time. But if you even want to calculate all the way from the first drop here, it's almost a year, right? Um, it's 185 days. It's the longest time. So it's something that you actually want to watch out for. And also another quick example, we can see over here too, something like that happened here too. Support area here, support. It kept getting lesser and then down to the lower side. So it's something that happens in the market. And I mean, if it has happened a couple of times, there are other examples that I can cite here, but if it has happened a couple of times, I don't see any reason why it can't happen again. I mean, I want to be bullish on the market. I'm still a bull on the market. I don't like to be bearish because being bearish means that um I have to embrace the fact being bearish means I have to embrace the fact that I may potentially lose some money. But as I exposed in my Telegram group, when Bitcoin was around 41K after this huge dump and we got to 41K, I told them I was going to split my portfolio in half. And that was exactly what I did. I was trying to dollar cost average because I had the feeling and the technicals were saying that it was actually going to go back down. So I had the feeling that I could get a better entry, which was exactly what I did. But it looks right now like we might be approaching the point where we can break lower. But I actually feel like the fundamentals are saying something else entirely because there have been a lot of adoption in the Bitcoin market. A lot of people are actually going into the market right now. I mean, a full country, an entire country just legalized it and claimed it and named it a legal tender. That means it is now officially legal in that country. And the name of that country is El Salvador. It's somewhere in South America. You can Google it. They've officially made Bitcoin a legal tender, and it's generally accepted as a means of payment. So that's actually very good. But what we can see is even though the price might fall down to the lower side, it's all just really manipulation, manipulation done by the bigger money, people with bigger bags in the market, where they just want to get better entries in the market. See, there's something I'm very sure of. And you can quote me if you want. I'm very sure of Bitcoin at $100,000. There's nothing I'm very very sure about that. It's not a matter of if; it's a matter of when. There's so much adoption going on, and so many people are actually bullish on the market. But before getting into the fundamentals, let me show you something real quick on the weekly chart. They say if you want to get a better view of what's going on in the market, you should look at it from a broader time frame. Now, there is this particular indicator that I like to look at, which is the RSI, Relative Strength Index. Now, this is very important to me because it actually shows me what's going on and where Bitcoin might be oversold potentially. So looking over here, we can see that the RSI is currently overbought, right? That means a lot of people are actually in the market and the price is not where it's actually supposed to be. That's what overbought means. And that's what the RSI indicator shows. But quickly, let me explain what that means, right? Over here at this part of the screen, from 70 to 100 is the overbought region, and from 30 to 0 actually is the oversold region. So when the RSI is actually at overbought region, that's when you actually want to be selling. And when it's at oversold region, that's when you want to be buying. That's what the RSI indicator does for you. And let me just quickly delete all of this here so we have a clean chart. Yeah. So this is important in the weekly because it shows us what's happening in the longer time frame. So let me zoom this so we can have a clearer view, because most people think that the line is actually a straight line, but it was actually a lot of price movements at this time. This is 2013. What happened in 2013? So this is what I assumed was going to happen in this market, right? I assumed that, look, in the RSI here, if we were following strictly, the RSI at this point here was at overbought region. And many people might have thought that this might be a good time to sell. But the price of Bitcoin at that time was only $255. People might have felt like this is a good time to sell. So they'll sell and feel like, okay, we're in a bear market. But look at what happened afterwards. This was, they missed out on a, how many percent? Okay, let's say they sold at the top precisely. They missed out on a 356% movement. And this happened within the period of how many days? Let's calculate that. From here to here before we saw another price movement, this was 210 days. So it was almost actually a year, um more than 8 months or so before we got more than 8 months before we got a spike upwards. And if I zoom and can reduce, if I resume and reduce the time frame, you see that there was a week to the lower side and there was a little support around this area, and then it broke down lower and then went back up. And even at this point here, we still had a week to the lower side before we continued upwards. So that's why I think that it's possible that we could have a dip before we have a spike in this market. But I'm not done with the RSI yet. So look at something here. If you notice, the RSI, when it broke out at this oversold region, at this overbought region, and went back down to this area, it stayed, it found support over here at the middle, which is 50. It found support over here at the middle, which is 50, and then bounced back up. And if you look, we went back down, and then this same 50 became some sort of resistance, and that was why it was became some sort of resistance, and that was what confirmed that this was a bear market, in fact. And look at the other markets that came on afterwards. And now look at what happened afterwards over here. This was the bull market of 2017, right? After the bear market was over here, we started seeing something here where the RSI started to climb up towards 70 and started to climb up towards 70 region. I found support again at 50. And then we can see that there was a bounce. It kept on bouncing, kept on bouncing, kept on bouncing, kept on bouncing until it found resistance again. So let's see what happened that period. This was 2017, right? And the peak was 20K. So until there was a peak, there was no, we didn't find resistance. Do you see what I'm showing you? Until there was a peak at this point, there was no resistance in the RSI. When we started finding resistance in the RSI, it just confirmed that, okay, this is actually a bear market. And what happened afterwards? We hit the rock bottom, which was below 30, and then started another bull run. And of course, what happened over here in 2019, where there was some sort of fake bull run, it's still the same thing, still applicable, still very much applicable. There was support in this area, support. And then when we broke down and found resistance at 50, downwards. And we could have continued upwards actually, but this was something happened in this period here, and it was COVID, where nobody could actually know what was going to happen. So how does this relate to what's going on now? Look at this. Now we have the RSI at overbought region right here, and this was over here at 42K. It was already overbought. And then when we finally peaked at 64K, the RSI was not even supporting it. We were at around 73, as opposed to when we picked over here, and even when we picked over here. How can we pick at 71 RSI? It actually made no sense to me. So I was actually of the opinion that we could get something like this where we had peak here, just like we got here and here. I was of the opinion that we'll get something like that. But right now, something is happening and we found resistance within this area. So I'm kind of skeptical. I'm of the opinion that, I mean, with the fact that it has happened severally, look, it has happened several. I showed you where it has happened here, 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 and even in these areas and here too. So it has happened severally in the past. There is, I don't know, it actually seems like it might happen again, where this place that was supposed to be a support area has now become resistance. And you can see very clearly, let me just zoom in this a little. It's actually bounced at 50, and 50 is now some sort of resistance. So um, I'm actually saying we could see it weak lower below $30,000. I know so many people do not agree with this, but I mean, it's just I've given you my analysis and what I think. I think it's possible that we can see it week lower than that, where we'll just see something like this, where we just see where we just see this area that was supposed to be a support area would then break lower all the way down to 20K and then probably spike back up, which I hope will happen. But if we don't spike back up, we could get a really, really long bear market. But that's if we break lower at this point. That's only if we break lower at this point. And obviously, we don't want that to happen. I don't want that to happen. But if we do break lower than $28,000, I will be pretty sure that we'll head to 20K. If not 20K, the lower 20s area, probably the least we'll go is probably 22K or probably 24K or probably 24K. I don't know. I don't see the future. But that's what it seems like is going to happen. And also, let me just throw in the Fumanchu cipher, which I always like to use when I'm doing my analysis. And if you can see, the Fumanchu cipher has been printing out a couple of red diamonds, which is actually bearish indications, which actually signifies that there is a bearish movement. I sincerely hope that this does not happen. But even if it does happen and we see a potential bear market, I don't think it's going to last for a long time since there's been so much adoption in the market. Plus, this is just Bitcoin chart. Ethereum is actually saying something else entirely. If I could just throw in this at Ethereum, you see we got this blue triangle, which actually means that the price is actually trending upwards. And if you even look over here at this Ethereum chart here, let me put this on the hourly. You can see that Ethereum has formed some sort of some sort of uptrend where we have this line being a huge support here, these green dotted lines, which is why I marked it as green, which it shows that this is where we should buy. And what it looks like Ethereum might be doing is a typical swing movement where we have something like this, hit the support, hit this resistance, break down to the support, hit this resistance, break down to the support, and then keep going until we hit this resistance and probably smash through it. That's what Ethereum seems to be doing. So Ethereum's chart is a whole lot more different from Bitcoin chart at this point. And coupled with the fact that EIP 1559 is going to launch next month, which is around the 4th of August, if I'm not mistaken. What I believe is going to happen is that we might have people who are trying to manipulate the market and they might potentially push the price lower so that they can get better entries. But definitely everything about the fundamentals is bullish. Every single thing about the fundamentals is actually bullish. Let me throw in one final fundamental indicator, which is the stock to flow model. Okay, so the stock to flow model is actually an indicator for stocks, for traditional stocks, but this guy called Plan D actually developed this for Bitcoin. And for years, you can see that it has actually stayed in line with what Plan B said. And what this thing is that is actually predicting the future price of BTC. And if you can see from here, all the way from when Bitcoin was worth pennies, it predicted that at this point we'll see Bitcoin at over $1,000, and you can see that that's exactly what happened. Even though it looked like we go off course sometimes, it always comes back and follows the chart. So right now we can see over here that it's going a little off course. But look over here. At this point here, it actually went off course too. And of course, this is actually manipulation. But this stock to flow model is actually predicting the natural growth of BTC and what it's actually going to be in years to come. But obviously, people want to take advantage of the market. And what we see here is manipulation, manipulation. We have the institutional money buying, or people with a whole lot of money actually buying and making sure that the price gets up and then dumping on everybody and make people lose, basically. So, but it's only for the short term. And if you can see this price here, over here, this was like $1,000 or $2,000. And a lot of people might have felt like they lost a lot of money. This was in 2013. They might have felt like they lost a lot of money. But look at this over here now. We have Bitcoin. This was in 2018. We had Bitcoin at 20K. So from 1,000 to 20K, that's already 20x. So if you had just kept your money and left it in the market, it will eventually recover. And that's exactly what happened in 2017, where we had people buying the top at 20K because of FOMO. They were fear of missing out, basically. So they bought at 20K, hoping that it will keep rising. But of course, the people with big money decided to dump the markets, and it went to, I think, as low as 3K. I think as low as 3K. And then, of course, it recovered back to 60K. So if you had bought in 2017 and you had left your money there just all the way to 2021, you would have made 3 times your money by now. So what's stopping that from happening again? You tell me. We have the stock to flow going off course a little, but I honestly think that this bull market is not even over yet. It's far from over, actually. So we have something like this similar that happened in 2013, where it looked like this was the peak, and then we had a recovery like this. So we're having something like that here. I think that we're having something like that here anyway. So we might have it go lower like this and then come back up, of course, to reach 100,000 and 200,000. Like I said before, it's not a matter of if, it's a matter of when. But also, like I said, this is only just my opinion, and you don't need to take me too seriously. Do your own research and reach your own conclusions by yourself. So, and of course, everything that I've talked about, you can also actually trade all of this if you know how to trade. But of course, if you don't know how to trade, you can watch my videos on how to trade. I already made videos. I'm going to drop a link up there and introducing you to the world of trading and how to trade to make profits, and of course double your capital. Okay, so with that being said, thank you for watching, and see you next time.